GM everyone, and welcome to another interview here on Coin Bureau. And today we are being joined by Andrey Kurennykh, the CEO and co-founder of Tangem, the manufacturers of one of the most well-known and user-friendly hardware wallets around. So Andrey, welcome to the Coin Bureau.
Hi guys, pleasure to be here.
Thanks, Andrey. Thanks for being here. So quick disclaimer, guys, before we kick off, nothing in this video is financial advice, so please consult your financial advisor before making any investment decisions. And if you guys are looking to pick up a Tangem device, we have a special offer on for you, a 10% discount, which we will include in a link down below, as well as a QR code on the screen. So you guys can pick up one of the best hardware wallets around with our special discount code if you've been convinced throughout the interview. So Andrey, before we dive into all the questions I have today on Tangem, hardware wallets, and crypto security more broadly, can you just give me a bit of an overview of yourself, how you got into crypto, and what you guys are doing at Tangem?
Yeah, so actually I'm a technical co-founder and I was an engineer like in my previous life. And my special knowledge and the knowledge of the core team was in embedded security, both hardware and software. And we basically had access to the technology that then evolved into the wallet and the hardware we have right now. It was not like a business idea in the beginning. It was an experiment because at that time it was the crypto was very different, and we started just with experimenting with the hardware, which ended up in the product we have right now, and the technology and the seedless approach and everything we are going to discuss today.
At that stage, back in, I believe you guys were founded in 2016, right?
That's true, yes. 2016, we had the first version of our wallet, very basic one, even before like NFC was supported by Apple. So we were never in very early days.
And in those days, was self-custody a big thing, or did people mostly use software wallets like Bitcoin Core? Did they use hot wallets? Like, what was the meta in those days?
Yeah, the good question, because in the very beginning, the self-custody was the only way of storage, only way of custody. And it was natural. It was the core idea of crypto, that you own your own keys and you are in full control of your assets. But of course, then gradually, first exchanges emerged, and first hacks, first problems with seed phrases. And at like 10 years ago, it still was like wild west picture. And I would say that most of the users understood what was self-custody, and if the evolution of users and learning curve started with self-custody those days, not with centralized exchanges like we have it now.
So you consider yourself then like an OG of these of the crypto space in terms of like hardware wallets then?
Oh yeah. That's true. So we of course we have an absolutely different type of landscape these days, and we understand that self-custody and hardware wallets, it's kind of a final point at this learning curve. And we see that like a majority of new users, they always start with some kind of crypto platforms, centralized exchanges, or well-known licensed services like Coinbase or Binance. But then gradually they understand the concept of self-custody, moving part of the assets to hot wallets and eventually cold wallets. So that's how evolution looks like.
So you raised self-custody there now. And for years, we've heard the mantra, not your keys, not your crypto. But especially for newbies coming into the space, they're still scared of self-custody. That's why they rely on these centralized custodians. So why do you think that is? Why do you think newbies are scared of self-custody? And what's the biggest single hurdle there?
Every crypto user, they understand that this full control of self-custody comes with full responsibility. And that's the main reason of these concerns, because it looks much easier to like give away your keys and crypto to some platform and just look at I don't know, some numbers at your screen in your account and have no responsibility. But at the same moment, we know all the problems with centralized platforms, all the risk coming from potential attacks and even wrong regulation in the end of the day. So it's a kind of balance. So I don't think that we will see everyone coming to self-custody. That there will be a share of users preferring self-custody, and there will be a lot of users who just will keep part of the assets in a vault under personal control, and that is a hardware wallet.
I'm curious then, in terms of the way we view the crypto landscape evolving, what would you say to someone, for example, who says, okay, I'm very comfortable with Coinbase, they're a listed company, my coins are safe there, they haven't been hacked. Why should I care about self-custody? For a user who's got that ethos, what would you say to them?
So again, it's very individual situation, I think, because the regulation landscape is very different. There are more mature markets and regulation. There are a lot of countries, a lot of markets with either no regulation or something very underdeveloped. And we have a users in every country in the world. And I understand very well that all of them have different rationale and motivation to store funds and self custody. It's always something different. It can be lack of trust to centralized services, lack of trust to regulators, and many reasons. But in our estimations, about 10% of crypto users have something in self-custody and use hardware wallets for that.
There's an interesting point you raise around particular regulations and jurisdictions. If you're comfortable to share this information, I'm curious in terms of geographic breakdown in terms of potential Tangem customers. Do you have that information at all, or is it just more a rough idea?
No, we of course we understand the geography, but not from the operations of transactions of our users. It's only from where do we send our wallets to, and about 40% of our users are in the United States, and another 40% are in Europe. So that's roughly the structure of geography that we have.
So one of the biggest advantages of Tangem over other hardware wallets is the concept of these seedless hardware wallets.
Yeah.
But can you explain to our viewers, how does that actually work? I mean, if there's no seed phrase, how's your crypto stored in the private keys, for example? How are the private keys kept safe?
Yeah, of course. So that seedless approach is basically what differentiates us from other wallets. And we pioneered in this technology, and now it's being replicated by other wallets, but in different form. But we try to solve this, I call it a burst trauma of self custody, because from the very beginning, this seed phrase was a part of relations between the wallet and the user, and basically it meant that wallets just try to shift the responsibility and shift the blame to users, because once you write down a seed phrase, you're responsible for everything. It doesn't matter what happened in an application or in a hardware. The fact that you have the seed phrase basically make you responsible for everything. It actually reflected in a way how the security concept worked in self-custody, because if you look at potential attacks on the individual crypto holders, you will see that a seed phrase is danger number one by a landslide. So because it makes no sense to attack a sophisticated hardware, protected software, if you can try to trick a user into giving away seed phrase through social engineering attack, phishing, no matter what. But it's the easiest way, and everything else basically that doesn't matter. So what kind of screen you have on a hardware wallet, buttons, software, if you give away seed phrase, the main threat will be there. And we understood this from the very beginning and try to solve this challenge, because it's a really challenging task from the engineering standpoint, because of course we need to give something comparable to a piece of paper and ink in terms of reliability and lifespan. Because if you write down like 12, 24 words, it will be there maybe for a century. And what we have right now is more or less comparable, because we have a very simple hardware architecture, which have just one chip, which is very, very reliable. So it has a special flash memory inside that can store data for decades, especially at the room temperature. If you don't put it into extremes, it will store your keys for a very, very long time. Meaning that we can be sure that our users can store keys and use those keys for a very long period, comparable to a physical ink and paper. That was the initial idea, the initial concept, and we had a few iterations about 5-6 years ago, and eventually came up with the current concept, current architecture, which we think is optimal in terms of security, reliability, and user friendliness, which is, as you said, again, is our great advantage comparing to other hardware wallets, because we understood that we cannot count on educated, sophisticated users anymore. We need to bring something to newbies, and we need to make them feel comfortable with hardware. So that's how it all started. And right now, about 80-85% of our users still live without seed phrase. So they decide not to write down seed phrase, and they feel comfortable and safe. And again, we also feel safe because we understand that any kind of phishing attack on behalf of Tangem, Tangem support people, it will end up with nothing, because the users just don't know the secret. They don't know the seed phrase and has nothing to share with hackers.
Yeah, that's a very good point. And around the seed phrases themselves written on paper, in terms of how long term that is, if you think about it, can be, in a fire, you can lose your seed phrase. I mean, there's many examples I've heard about where people have had their seed phrases thrown away because someone who was cleaning their house thought it was a nothing random piece of paper. Another person I was being told a story about, that they was misspelling in one of the particular words on the seed phrase, and that's been then they spent weeks trying to recover it. So it's definitely, from a UX perspective, definitely not user friendly for newbies. But when it comes to the Tangem service more specifically, how exactly does one, for example, regenerate if they do? You've got redundancy in place as well in terms of the cards, right?
Yeah, so it's very simple. We have 2 or 3 cards and secure mechanism to generate and replicate private keys in those cards. So physically, you have just 3 copies of the same wallet, same private key, but no seed phrase shared with the user. And if something happens to one of those wallets, you still have other two copies. And the first one, if it's lost or stolen, it's protected by a password, which cannot be hacked like in a real world scenario. So you are safe with other 2 copies, and you can buy a new wallet and move all your funds, or just stay with those two to replicas and be safe for a long period. So basically, we just excluded this step with writing down seed phrase. Everything else is more or less the same. So technically, it's private key, which derivated into like multiple wallets, multiple chains, and we support 99.9% of chains and assets on the market right now. But internally, it's just one secret in a chip.
One could think of it akin to kind of like a 2 or 3 multi-sig sign-in of some description. I mean, obviously, the private keys are separate devices, but in order to actually facilitate a transaction, you'd need 2 of the 3 cards.
No, it's a bit different use case in our scenario. It's the same private key in all cards. It's not multi-sig solution. You can build a multi-sig based on this, but you need other instances of the wallet. Then you can use like Gnosis Safe or similar on-chain solutions, or even like use key sharding if you want to. But for now, it's only key replication. It's not multi-sig, because multi-sig is not something for newbies. I think you know that. So
yeah, it's definitely not. I'm just curious for more advanced users if there's ways in which they could up that security with contingencies and stuff like that. If they had more than one person that wanted to have access to it as well. But you said there are, obviously you can use third-party technology to do that, right? Because this is private key you've got, right?
Yeah, correct.
Okay, got it. And then when it comes to user front end, obviously you obviously support multiple different other hot wallets as well, right? Web wallets and stuff like that. Can people use this private key if they want to interact with different chains and different front ends and different wallets? So web wallets, for example, or something like that. Is that possible?
Yes. So basically, you can do everything in DeFi smart contracts. Everything is connected through our applications. And if you want to combine our wallet with other wallets, I don't know, then you can use WalletConnect for that, which is pretty standard on the market right now. So you can link your DeFi smart contract with Tangem wallet. And we have very, very friendly integration, very clean and very understandable to newbies again. So you can try and see how it works. But we made it very intuitive for users to work with DeFi through WalletConnect.
And in terms of other features and functionality, obviously your main selling point over your competitors is the Seedless hardware wallet. But what other features and functionality do you think you have that differentiates you from your competitors in the landscape?
I would say that we have a very, very sophisticated and very well-organized market information. So we help our users to trade. We have integrated a lot of swap providers, and still we keep everything very, very transparent and very manageable to our users. So no hidden commissions, like all the fees, all the terms are well communicated. So no surprises during transactions. And I think, that's a very well accepted service that we provide. Again, we just try to filter out like providers that we think are not really reliable. So we only work with those who like transparent and consistent with our users. And we let users choose among those providers, among trading pairs, and make the transaction very, very comfortable for the users. So they understand each step. They don't afraid that like funds will be locked for a week or something. So we keep our users well informed about everything. And I think it's one of the best on the market. The in-app services that we have for swaps, on-ramp, off-ramp, and that's our differentiator. So what else? I mentioned about WalletConnect, and that's important step for DeFi integration, for safe DeFi integration, because we now have all the transactions simulated and verified by blockade. That's very important because that attack channel through fake DeFi contracts, smart contracts is getting more and more serious, unfortunately. So we do our best to protect users from dealing with fraudulent DeFi infrastructure. That's also very important. And soon we will have this the separate part, the separate product that we call Tangem Pay. But I think I will tell a bit more about this later.
Let's just talk more about the crypto security space more broadly now. And I'm curious, where do you see the biggest opportunity in the crypto custody space at this moment?
As I said, we will be 100% focused on self-custody in the future and the hardware wallet as a part of it, because we think that regardless of this new, the scope of the new ecosystem, the new landscape of crypto services, regulation, we still believe that self-custody is the core right and core concept behind the whole industry. And we think that a significant share of crypto users will eventually store and manage crypto assets themselves. But it doesn't mean that we must be isolated from this broader landscape, because we see that there are more and more services coming, more and more regulation. We already understand that there will be services which will require KYC in any scenario. So you will not be able to deal with, for example, tokenized assets, real world assets without being KYC'd. And we think that the next opportunity is there. So we are building a new type of architecture that will basically separate your vault, your pure crypto assets and self-custody, which will never be banned in our understanding and will always be private and will not require you to share your data or anything about anything comparable to regulated services. And at the same moment, we want to keep the self-custody concept connected to all type of services which require regulation and require KYC. And the biggest challenge here is to separate these two things, where you feel comfortable with your own vault and you understand that as a user that it's total control, like a self-custody control over your assets. And at the same point, you have a lot of services in the same application, which can share your KYC data, can use your KYC data for card payments, for investments into these tokenized shares. So everything that is merging right now will be more or less regulated in many jurisdictions. And we think that's the biggest opportunity for us to build a self-custody wallet, which eventually will cover all the financial services like DeFi bank. So that's I think is the next big thing for the market, to build a service that is comparable with a retail bank and retail investment platforms, but based on self-custody, based on pure crypto core.
That's really interesting. But I'm curious then, in terms of how technically would you then implement the KYC onto that? Because would you then say that your particular Tangem device is attached to some sort of a unique representation of a wallet that's then KYC'd by a third-party provider? or would you be doing would you be handling the KYC on your end, and then it's like but then of course you're storing KYC documents. So I don't know if that's something you guys would necessarily be interested in. I mean, curious, how would this technically look?
Of course, that will not be us who stores KYC document. We basically provide an integration with regulated entities, where regulated services who will collect the KYC data. And the most important point here is the bridge between the self-custody, which Tangem represents, and those regulated services. And here we see that the wallet, self-custody wallet, can have a separate account which can store your identity and can be used to authenticate you as a user in regulated services. And that's, I think, the most important bridge, the most important integration point between self-custody wallet and regulated wallet, where you use your wallet, your self-custody wallet, to authenticate you in a regulated services. But that doesn't mean that your assets stored in the vault in a self-custody could ever be linked to anything you do in a regulated vault. It will always be separated, just the same way like account system is working right now in Ethereum, for example. So you basically have separate accounts which cannot be linked to each other just mathematically, and you have sufficient privacy in all those types of accounts and services. And the same thing will be here. So we will make sure that the self-custody part of the product is totally separated from all the services we will offer to our users.
Yeah. And the reason and I'm curious then, just in terms of your perspective of the RW, you mentioned RWAs as one, as regulated tokenized securities, for example, or that would require KYC. The fact that you are adapting business model, or implementing a product, a feature that could, adapt to this changing landscape. I'm curious then, is that your view that you think tokenized real world assets is a big new narrative, and this could become the future of blockchain technology with traditional assets?
Oh yeah. I think that's the a very obvious and natural evolution, because a lot of individual investors will come from a classic securities market in retail platforms to crypto, just because it's more convenient, more flexible, and controllable platform paradigm for those mass market users. And we think that tokenized securities, first of all, will be the first crypto assets which will require KYC in any scenario. Stable coins, you see that it can survive without that. So basically stable coins are more or less non-KYC business, but it will not work like that with tokenized securities. It will be regulated by something similar, similar legislation, just as a usual security market, but the underlying platform will be absolutely different.
Which regulatory regions, jurisdictions are you seeing the most progress in terms of movement for laws and regulations around RWAs right now? Is it Europe? Is it the US?
We are keeping close look at what happens in the United States with this recent initiatives and acts, and I think they will set the rules for the whole world for that. And from what we see right now, we think that there will be more and more regulation. It will finally affect not only new classes of assets like the tokenized securities, but also will affect pure crypto swaps. We think that maybe in 2 or 3 years in major jurisdictions, every license will be required to swap ethers into Bitcoin. And we want to be prepared for that. So because right now it works in some way of global arbitrage, but we understand that we're preparing to some new architecture, legal architecture, where it will be somehow regulated.
That's a good point, because obviously regulations, what they may look like right now, they may change again in the next few years. They may become quite strict, and it's good to think about in the future
Right.
for this. Now, it's one thing to build the right tech for people to custody their crypto more effectively, but self-custody starts with education first. So on that front, what can we expect to see from you guys in the near future? Obviously, you've mentioned some of it already, but in terms of other initiatives and other features that you're thinking of rolling out?
Yeah, good question. Yeah. So actually, we've been doing a lot for education of our existing users, new users, and the market in whole. We are now working with many universities in Europe and the United States just to explain the concept, explain why it's a proper way of storing crypto assets, and even share some in-depth technical aspects of a product security. And we think it's very important to explain to broad audience what does it mean, because as we discussed, all the newbies, they're not technically educated people. So the audience we had 10 or 15 years ago, they were 100% geeks, and they understood what is self-custody. It shouldn't be explained. Right now, it's totally different. So we start from the opposite point and need to explain to make people comfortable about storing assets themselves. So we will be only extending this because we think that this information, the very basic information about self-custody, about its safety, is crucial. It's very important. It's even more important than testimonials or any kind of user feedbacks. So there should be very structured, very clean way to explain what does it mean, how it's compared to centralized storage custodians and even cash.
Indeed, explain the difference between self-custody and hosted. But I'm curious then, in terms of how would you break it down for users, especially for complete beginners who may be intimidated by it, the difference between just self-custody and cold storage? Like, how would you? Someone is first to crypto, they just bought their first Bitcoin and they want to know, okay, so I know self-custody, I don't hold it on exchanges, but what's cold storage?
That's a very important question, because I think, and it's the most difficult one to explain. Many users, they think that just are good with mobile applications, storing the keys and signing transactions. And our role here is to explain that the separation of the keys, the fact that the core secret is stored in some separate hardware, which is controlled only by you, is totally game-changing approach, because it doesn't matter what happens to your your mobile phone or mobile application, or I don't know, your place of residence. So whatever happens, you still have a card, a chip, and a secret inside the chip that is synonymous to a full control over the assets. So the separation between any kind of gadget like platform, software, and the real piece of hardware that stores all your funds, that is very important. And that is the best way of explanation of difference between a cold storage and any type of other wallets.
and that air gap from any sort of online access of any description. And then, so I'm curious then, just in terms of how you guys, straddle the fine line between, now we've talked all about security, but it's there's a fine line between, you want maximum security because that's the most important. That's the reason people buy a hardware wallet. And then also, usability and ease of use. And you guys have obviously managed to straddle that with regards to the no seed approach. But when you're thinking about product iterations in the future and developing a hardware wallet that people can use easily as a newbie, but also is rock solid secure, how do you find that you straddle that line? Like when you're thinking about product iteration?
I think, so we will definitely not spoil what we already did. And the hardware wallet we have right now and the onboarding process and all the core functions of the wallets will remain the same. So we want to keep it as simple and as accessible as possible to very broad audience. And I think we will never do something more like complex on the hardware side. So not something with like screen and buttons, because we don't think it's a real advantage in terms of security, and we think it's a real problem in terms of usability and UX in the end of the day. So we have a good balance between security and usability at the moment. So there will be no significant evolution on the hardware side. All the innovations will be in the software and in this integration with like other real world services in many jurisdictions, and this separation between self-custody and regulated services. I think that's the direction we are going right now.
Just to finish off, Andrey, you obviously mentioned the real world component and the integration with Tangem there, and that you're not going to iterate on the product side, but are you then thinking, are there any sort of software upgrades or partnerships or integrations or releases that you guys are looking at in the next few months that our viewers can look forward to?
Yeah, so we will start to issue first Visa cards to our users, and that will be some like limited numbers in the beginning, but by the end of the year there will be broad campaign, and we will be able to offer cards to like users in 90 countries. So that's a huge step for us, and that will be the first service that will be based on this separation and that I explained. So that's part of Tangem Pay, and the way it will be organized is, I think, is a major step for us, because it will be integrated into our application, though it will be absolutely like optional and voluntary, and at the same moment it will be a part of Tangem application and will have the same high quality UX. And at the same moment, it will be a KYC based service, which doesn't mean that you will need to like disclose your identity for the entire wallet. So, and that's our like next biggest update for the wallet itself. Then we are going to introduce more flexible account ecosystem, because this kind of new services would require separate accounts, and the wallet will be managed on the account based on the account structure. And that's again is important step. But at the same moment, it will not change the experience of newcomers, because we we will keep the wallet as simple, as understandable as it was before. So the new users will see exactly the same onboarding process, same interface, and then gradually will be more engaged in maybe investment products like yields, swaps, payment services, and virtual IBANs with stable coins deposits. So there will be more and more services offered to them, but we will not overload the interface. It will all be like very comfortable for the new users.
Yeah, an all-inclusive DeFi neobank in your pocket.
Yeah.
That's great. Well, thank you, Andrey. This has been a great conversation. It's always important to understand not only the importance of self-custody, but also the tools that help us achieve that. So thank you again for coming on the Coin Bureau. And again, if you guys want to get a Tangem device, we have a 10% discount on offer. It should pop up with the QR code on the screen right now. And of course, the link will be in the description. So thank you again, Andrey. It's been a great conversation.
Thank you. Thank you, Nick. Thank you, everyone. It's a pleasure.